Hedge fund titan Bill Ackman is having a boffo year. His Pershing Square Holdings Fund is up 33% year to date versus the S&P 500, which is up 12%. Okay, and then year to date, it's just fascinating to see over the past 5 years, you've got Pershing Square up 127%. Since the fund is not listed here in the States, but on the London Stock Exchange, the problem becomes the fact that the shares are difficult to obtain stateside. But now a newly hatched ETF allows you to invest like Ackman. VistaShares CEO Patti is here to roll it out in a Fox Business exclusive. Adam, we all want to trade like the billionaires. Not so easy, though. But your new ETF, it's called the Target 15 Activist Distribution, and activist is spelled ACKY. TIVIST. It appears to make it extraordinarily easy. How and what's in it?
So, yeah, who doesn't want to invest like a legendary investor, but with 15% annual income paid monthly? What we try to do is we capture the publicly available portfolio of Bill Ackman at Pershing Square, and we overlay an option strategy to generate that 15% per year. And we pay it out monthly, targeting 1.25%. So it's a nice way to get a really interesting portfolio chosen by one of the best investors in the world, with the added benefit of some nice income along the way.
Okay, the 15% annual income paid monthly, can you explain how that works?
Yeah, it's a covered call strategy, and we're covering the entire portfolio. We write out of the money calls, and we are looking to scrape off that 1.25% per month on each of the holdings. When we reach that, that's what we're paying out. We're not looking to maximize income or to shoot for the stars or do anything aggressive. We're trying to provide stable income every month so that investors know what to expect and know when they're receiving it. It's a very simple strategy. It's data driven, and when we reach that 125, we pay it out. If we hit 126, we're rolling the rest of it into the NAV. Dividends from the underlying holdings are not included in that 15%. Those are rolled back into the NAV as well. So it's a really interesting strategy. And of course, you get the holdings of Bill Ackman at Pershing Square, which has obviously done extremely well over time.
What kind of fee am I paying?
It's a 95 basis point fee, which of course is a lot less than a hedge fund fee, and we feel it's right in range, particularly given the 15% income that you're due to receive every year.
Ackman famously has made so much money on very successful bets. He'd be the first to tell you, listen, he's lost some as well, but Chipotle Mexican Grill, that was a big one. He doesn't own that anymore. In this fund, there aren't that many companies, but the widely held stocks, everyone from Howard Hughes to Uber, he likes Brookfield, restaurant brands, Alphabet is in there, and his timing is really good, is it not? So you're able to capture his brain in this fund.
Right. Well, we chose him because he's a high conviction long-term investor. So he's not in and out of positions every week or buying hundreds of positions and hedging them out and doing all kinds of wacky stuff. He finds companies that he thinks are undervalued. He gets involved with the companies to try to generate value. And that's great for an ETF because we can capture those holdings on a quarterly basis. And we are an active ETF. So if he makes changes intra-quarter, we can capture those as well. But it's an interesting portfolio, right? As you mentioned, we've got those growthy names like Uber and Alphabet and Amazon, but then you have some interest rate sensitive stocks in there, like the restaurant companies, the investment management companies, and the real estate companies, which should, perform very nicely when hopefully interest rates come down later this week.
Yeah, we'll know Wednesday on that, won't we? So Bill Ackman, okay, that ticker symbol is ACKY, ACKY. Bill Ackman is not the only billionaire that people want to mimic. In fact, certainly at the top of the list is Warren Buffett, and you're doing that with another ETF called OMAH, O-M-A-H. I need to know how this one's going to work because Warren Buffett doesn't own, well, he does own individual stocks in a huge stock portfolio, but the companies that are under the Berkshire Hathaway umbrella, he bought outright, correct? So tell us exactly how this one is mechanically working.
Right. So we launched that back in March, and that's what started this all out, right? I mean, we've reached over $500 million in assets in OMAH since we launched in March in 6 months. So that's been extraordinarily successful. And what OMAH is again, invest like Buffett, but with 15% income paid monthly. So we have a portfolio of 21 equity securities. The top holding is always BRKB. And then we capture the next 20 largest publicly traded holdings within Berkshire Hathaway. So it's Apple and Bank of America and VeriSign. Well, VeriSign, he did reduce his stake recently. Visa, companies like those. So we're not capturing the private companies. If he's holds something 100% and it's not listed, we're not capturing that. But it's a great way to get involved with these value tilted companies, particularly in an environment that's been very growthy and very momentum driven.
Well, you just said it's been wildly successful, but I mean, it's kind of flat since it launched, slightly up. Do I have that correct? So what do you mean when you say that?
Well, in terms of asset gathering, so when you look at these options income ETFs, you can't look at the price return. You need to look at the total return. So we've been paying out 1.25% per month for 6 months on that fund as well. So you need to add that to the price return.
Got it.
So you can actually determine exactly. But in terms of reception from investors, it has a place in your portfolio. It's a good diversifier to your core equity, and it's who doesn't like Berkshire Hathaway?
Well, Buffett is one of the best of our generation and will probably be of many generations to come. Good to see you, Adam. Thank you very much for sharing the OMA and ACKY funds. We appreciate it.
Thanks for having me. Thank you.